Hello, folks. Welcome to Pro Trader Strategies. We are an educational company. It's Friday, the 23rd of July, and we've got some economic data and a lot of markets to kind of review on some charts I want to go over really quickly. So I'm going to try and blow through some of the major indexes really quickly and get to some trades and get to the trades that I've been doing and talk about some markets that might be making some reversals here that we can take advantage of going into next week. We got the setup candles today, and then basically next week we'll look for some follow through. But with the economic data across the pond, we got those flash manufacturing and services PMI. Remember, Purchasing Managers Index is forward looking because they are the people, the folks that are in charge of ramping up the manufacturing process because they see demand, or pulling back on the manufacturing process because they see the lack of demand. So it's forward looking. It's one of the best economic data to look for as far as I'm concerned. Anyway, so French manufacturing PMI, keep in mind Germany and France are the manufacturing sectors of the European region. So important to look at France and Germany. So the French manufacturing PMI in line with expectations at 58.4. 58.1. It was expected 58.4. The services for France coming in at 57, slightly lower than the 58.7. German manufacturing PMI 65.6, expected to be 64.2. The service sector for Germany, coming in at 62, expected to be 59. The broader European region outside of France and Germany, they all kind of get bundled together there, folks. So the flash manufacturing PMI, 62.6, in line with that expectations. In the service sector, a little bit higher, coming in at 60.4, expected to be 59.4. Great Britain's manufacturing PMI, slightly lower, coming in at 60.4, expected to be 62. Services, 57, expected to be 62. And then our United States manufacturing PMI, keep in mind, we're really going to be waiting till the ISM, which is the Institute for Supply Management. Somebody joining us online and in the office with the dogs walking in here. They know how to open doors. Service sector for the United States, 59.8, expected to be 64. So anything above 50 is expansion. So all of the numbers above 60, that's good to see. Some of them maybe not quite as high as what was expected, but across the board, I would say that is a good sign, relatively bullish there. So let's talk about a couple of other things as well. ECB also came out and said that they are going to continue their asset purchases. What does that mean? Well, that means that basically they're going to support their bonds or their interest rates. That will keep interest rates suppressed, okay? And with that said, that means that the United States is likely to continue their asset purchases because it's a race to debase, folks, is really what we talk about here. And that is basically you kind of weaken your dollar, right? You print more dollars, that weakens it. That does create inflation, but the thing is, when everybody is doing it, it basically levels each other out. So the fact is, we do not want to see them do their asset purchases, see our interest rates start to go higher. It could strengthen our dollar, a lot of other negative aspects to that. So I think that they're going to try to avoid that by continuing the asset purchases. That said, banks are not going to do very well. But first, let's talk about crude oil. You know, we're up in that 70s area. We're starting to see some weakness. If we were to flip through and let's say call this, we have monsoons going on today, and it is loud. So XLE, check out this chart. You can see that the market is starting to roll over here. We've got a topping pattern and the market starting to roll over. I think that this is very similar. If you look at even the individual, MRO, I want Marathon, that chart looks exactly the same. So I think the energy sector is going to see some weakness going into next week, all right? And then we've got the bonds, they're unchanged. I might even stop looking at the bonds right now. To be honest, I think I'm going to stick right around that 160 handle there. Bitcoin, down $15 on the day. That's nothing. I am still keen on looking at this 26 to 23, 24 area. That's where the gap is in Bitcoin. I think it's going to get covered, and I think it's going to get covered in the next couple of months, folks. So downside risk in Bitcoin, Ether, if I were to have to pick one or the other, I'd probably go with Ether at this point in time. There's too many headwinds for Bitcoin being called boomer coin, this gap right there below. So I think that Bitcoin, I would look to maybe even short Bitcoin, get long Ether, but I'm not going to play in this in Bitcoin. Gold futures, not really seeing a whole lot here today. All eyes are on equities as we're seeing all-time highs. So folks, that whole theory of the dead cat bounce is broken. So we have made a new high. I don't know that the downside is out here, folks. This one, this 14,444 in the NASDAQ, that is something I think we are going to revisit from Monday. All right, we had that big snap down. Everybody was scared about the Delta variant. Are we going to be closing down? It doesn't seem to be as big of a deal, I guess, as what we were originally thinking there, folks. And we're starting to move higher. So we've completely erased all of last week into Monday's sell-off there. Not much of a sell-off, a bit of a correction. I think that there is some more downside there. NASDAQ never tested its 50-day simple moving average as the rest of the indices did, as we saw here in the Dow Jones Industrial Average, breaking below the 50-day moving average, or sorry, simple moving average on Monday. We've erased that. Dow Jones hasn't made all-time highs, but we are darn close to that, and it very well may go up there and test that again before we start resuming this downside. I think the downside risk in equities is still there. There's way too many people talking bullish. Now, we've seen earnings come out. Earnings are actually really good. They're a lot better than what was expected, and we're actually even seeing the equities after their earnings make outpaced moves. So in the webinar, especially for earnings, so if you're not really familiar with trading around earnings, I really do a good job of explaining that in the earnings webinar, so please check those out. But what we see during these earnings trades is a lot of times in the past, we've seen the market maker move hold, which means the expected move. We are inside of that expected move. But right now, during this earnings, we're actually seeing outpaced moves. So short credit spreads in this current earnings cycle is not going to be working out nearly as good. I think you're going to have to be picking more directional. So the iron condors that I talk about in some of those webinars for earnings, I'd probably stay away from those for this one. I think you're going to have to come up with more of a directional assumption this time here. And then we got the E-mini S&Ps, another all-time high, basically printing as we go. First sign of any weakness is going on right now during this webinar. Now, obviously, during this video, but we need to see a confirmation here. It would have to close here and get a red candle, which means close the red candle below this setup. Now, obviously, this candle isn't out right now, but this is something I would be a little concerned about because of the rally that we've gotten off the morning move. We're going to start seeing here very shortly where people are going to be leaving. And we used to say in the summer times, it's a rush for the Hamptons. Afternoon volumes really start sucking out of this. And with that said, we're kind of topping out here. We could see the weaker hands, some of the people that were riding this to the upside start to cover here and maybe get a little bit of a rollover throughout the day. I'm not really looking at that as being a sure thing at this point because that candle's not closed. But I do think that with the massive rally we've got, we could see at least a halfway pullback in those equities there heading into the close there. So the last hour today is going to be very, very, very important for next week's setup, folks. If we see that weakness into the close, that's going to be bleeding into next week for weakness as well. So watch for that last hour, the way that the candles are going to be setting up today for our day, for the day candles, because we could start seeing some weakness. Now, snap. Folks, we all make mistakes. I was slammed yesterday and getting ready for the webinar, and I forgot all about this snap trade I had on, and usually do not like to ride these out through the earnings, folks. That's something that is one of my rules, is that if you have on a long strategy, let's call it, so basically long puts, long calls, right? You don't want to go into that earnings because of the volatility comes out. You know, you want to be long options heading into that possibly, but you definitely want to try and cover those before the market has their earnings. And I made a mistake of not doing that and broke one of my hard, fast rules. It just kind of slipped my mind yesterday and missed covering these. So if you guys remember, basically on the 3rd, I think it was actually, when did I do this? The 3rd. So I've had this trade on for a long time, and all it's done is gone sideways. It was pretty much being close to worthless, but I had long puts on. Probably should have covered them on Monday, but I was riding them out, and today earnings knocking it out of the park. As Twitter, Facebook, everybody, all of the social media, risk is to the upside right now, folks. But anyway, I had done these September 60 puts. I bought them for $6.15, and I dumped out them for 75 cents this morning. So did not work out. And, as a rule for you folks, don't forget to share your screen. Folks, you got it. Snap trade. All right, I'm going to go back through the charts here in a second. So that's probably why everybody's leaving. They're like, oh my God, this guy keeps forgetting to put on the chart. Throw it over there in the comments section. Hey, dude. So Snap has earnings, blasted off to the upside. So I had on the September 60 puts in there that didn't work out for 615, sold them out for 75. Now, I'm actually not going to go back to those. I'm going to start hitting some trades here. So the other trade that I had done for today was the bank sector. So if we're going to keep the interest rates suppressed for the foreseeable future, right? Well, that's not going to bode well for some of the retail banks. Now, I'm not talking Goldman Sachs or Morgan Stanley's. So those are some of the institutional banks. These are what I'm talking about, where they're going to make most of their money on like mortgage lending and interest rate spreads, basically, is how they make their money. And with the interest rates this low, they don't get that spread. They're not getting 50 basis points a deal. They're getting maybe, teenies, tenths of a basis point for a deal. So that eats into this. If we look at Bank of America and across the board, these banks, the regional banks, are looking pretty similar. You could probably look at Wells Fargo, and the chart is going to look almost exactly the same, breaking below its 50-day simple moving average. I picked Bank of America because I think it has better options. I think more people trade Bank of America. That's creating a tighter market for me. I don't like the big wide markets. So for newer traders, probably lean towards Bank of America versus Wells Fargo, just so that you don't get yourself into a situation where you're paying too high for these premiums, because when the bid offer is really wide and you're going mid-market, you could be giving up some edge there. So I would pick Bank of America. And with that said, in bank, I did this just like we talked about last night in the put diagonal, right? We did this as a setup for that. I didn't have this as an example in the webinar. I actually was using Netflix as an example for the webinar. It's a little bit sloppier of a setup than I think what we're seeing here in the bank sector. So I did the Augie-Ock diagonal, all right? So going into the longer term duration options, that's where I'm buying, all right? I'm looking for around that 84 delta strategy, and bought the 43 puts in there. Those are in the money. So with that said, then went in and sold the 36 puts in there, and did that for a total collection of right around, what was it, $5. I paid $5.27 for that. Now, following my rules there, $5.27 for that spread. It's a $7 wide spread, so that's right around 75% the width of the spread. And that's part of the rules. We want to pay less than 75% with a spread on a diagonal, okay? And I was right around there. It was slightly over, but rounding down, I got to that 75, let's say, but it was just slightly high. But I want to take advantage of this to the downside, and I think we're going to go down there and test around this 200-day simple moving average before we start resuming any type of upside. So by the time we would get down to around that 200-day simple moving average, I figure it'll creep up. It's going to be very close to around that 36 put where I am short. So that would give me the full width of this spread on that trade. So looking for bearish moves in the banking sector. Bank of America is the one that I'm looking at for this one here. That's BAC. I wanted to get the ticker back in there correctly. Now, AMD, these guys looking like topping patterns. We talk about this type of setup in the webinars where we're looking for bearish setups, Well, this is a bearish candle. If it were to finish like that today, you would be looking for a confirmation on Monday. You can see I drew that line to go below that previous day's wick. That would be the confirmation for a move to the downside, back down to the point of control. Now, something to note here, we're looking at a gold cross coming up here. If the 50-day cross is over the 200-day, that's usually considered a gold cross, and that is bullish, all right, long-term bullish. Right now, if we start getting the sell-off, though, it's probably not going to make that cross happen. And then we could look at very similar. It depends on what you're looking at here. NVIDIA, if you wanted to go for a bigger name stock, I'm already short in this name here, but you can see getting another setup here, and a finish below yesterday's bottom would make this look like a real confirmation. We got talked about my short in the videos and webinars and daily market commentaries. So I've already been involved in this trade, so I'm just going to leave my shorts that I have left on in this trade. But if you wanted to get on this trade or missed it the first time, this could be an opportunity. Intel is looking pretty bearish as well. The charts across the board, INTC looking bearish there as well. You can see the drop down on their earnings. Now the banks, I talked about Bank of America. All right, you want some bullish ones? McDonald's, if you're talking food, CMG, the reopen trade for any of these fast food chains are doing very well. Starbucks came out with their earnings today. Their new app is crushing it through the pandemic. So that upside, Coca-Cola is part of that reopen trade as well. You can see making a bounce off of all of these major names, their earnings. Basically, you think about it, you go to Coca-Cola, you get Coca-Cola from McDonald's and all of these fast food chains. That's really where their earnings are going to come in. Pepsi, they got the food aisle at the grocery store also. But this part of the reopening trade is doing very well. Win the casino reopen trade, not so much. All right, and then social media, Twitter, upside risk across the board. Twitter actually looking a little weak right now, but if you look at Facebook, Snap, we already looked at Snap, but Facebook getting a boost off of Snap, obviously that helped. But Twitter and the broader social media names are doing very well. Now another one, XLE, we were seeing crude oil move higher. XLE though, giving us a signal that markets are starting to look to roll over. And you can see that chart looks exactly like MRO, which is the stock for Marathon Oil, right? Well, the ETF is the XLE, which is more energy, but those both look the same. Downside risk, obviously, here in the energy. So if you're going to play something here, it's got pretty high implied volatility for XLE. I would be looking to sell some calls here somewhere in and around this point of control if I could. So right around 52, which is the point of control. Let's just take a look at it, actually. I might throw a trade on here while we're currently talking. So actually, I can put that over with this being set. So let's just take a look at Marathon Oil as a trade here. I'm doing this. I'm looking at the Thinkorswim. I want to do it in XLE because I don't want to deal with any type of earnings. So let's just take a look at it, make sure that earnings are coming up there. So I want to stay away from earnings with a trade where it has high implied volatility right now. Now, if I was going to do the Marathon Oil trade, I would do that Marathon Oil trade right before the earnings because of that high implied volatility. If I'm looking for a directional play with high volatility, I don't want that earnings in there. So XLE, I can see that it's got pretty high implied volatility. Yeah, you got this one little spike here, so I kind of looked to discount that. I would say that this implied volatility is in the upper half. You see us talk about this in the daily market commentary, so I'll just throw it in here now. I like to try and discount, like if it's a black swan event or something like that, or anything last year. So I'm only going to look at the highs, try and click on some of these highs here and draw a line. So I'd say that is the upper band, so 0.50. This one's a little bit off, but I'm just going to say that that's probably around 2.5, and we're at 3.7. That's in the upper half of volatility, so that's where I would start to lean towards selling options. So with that said, options, when you're selling, you got that high implied volatility. Well, when you sell high, you want to buy low. I mean, that's pretty obvious too. But what we want to do is take advantage of theta, right? Well, theta ramps up closer and closer to expiration. Inside of 35 days, that's where theta is really starting to go a little gangbusters. So I want to take advantage of downside in this. So I would probably be looking to sell some calls in here in XLE rather than Marathon. Also, Marathon's a lower price stock, right? It's trading around 10 or 11. It's hard to trade options around stocks that are less than $50, to be honest. But $50, you can still find some opportunities there. Below 25, it's almost better to go out there and trade the stock than, I don't know if you guys could hear that, but the monsoon is starting to pick up here. So with that said, I was talking about the charts. So I'm looking over here at the charts, trying to find 52, I think was the area on the other one. Maybe I'll build out this chart for you guys, go a little bit longer today. But 52 is that area I was looking for the market to go to. So I'm going to try and pick the 28 days to expiration here and go for the delta around that 16 delta. That's what I'm looking for in this. I might be a little bit more aggressive with this because 30 cents. And we've got the 52 strike right there. So this would be something I would look to try and sell. Now, if I were to go in here and do this, folks, you wouldn't want to go in there and sell the 42s. As a matter of fact, I would always go in just slightly better because it doesn't cost you anything to cancel, replace a trade, right? You can put it in there, and there could be a spread in there that all of a sudden gets hit because you put in a better offer, and it can auto leg it. So always work it in there. There's not always the market that you think you're seeing, and then slowly work it down. So in this case, 46, I would try and go in at around 45 and see what happens. See what happens on this, all right? Something like that, 45. Just, I'm joining the offer. All right, so that I will work up. I'm going to try and get those. I'm going to work those. So, something to do with that is then just go in there. It's sat there long enough for me. By the time you go through and click on all the stuff and hit cancel replace on this trade, why aren't you going for a cancel replace? Oh, wait a second. What just happened there? XLE. That's what I'm doing wrong. Cancel replace. I was in the wrong place. So it's sat in there long enough. I'm going to cancel replace, move it down by a penny. Confirm. All right. Didn't get hit. So I'm going to cancel replace one more time. Try and get the best market. There we go. It ended up being right around mid-market anyway on that trade. All right. So got those in. Just got them in at 44. So I basically just did the August, take advantage of that theta decay, sold the 52 calls in there for 44 cents. All right, playing that to the downside. That's perfect. If it goes up there, I'd be happy to get out of XLE or get short XLE at the point of control. We usually see it just kind of settle down there anyway, and that's an opportunity to take advantage of that. All right, so we just added a trade there. XLE, MRO, I'm looking to the downside. So XLE added, took off, snap. No, sorry about that one. But snap is off and continuing to play the NVIDIA to the downside. Added the XLE to the downside and Bank of America for negative deltas. All right, so a couple of trades added, one live. Hope you guys all enjoyed that. Make sure you guys hit that subscribe button. Also, get the notifications set up so that you guys can get notified when I come on live unannounced. And comment over there at the side. If you have any questions, comments, or anything else, I'll circle back around. Make sure you guys are a clear concept. And if you can't smash that, take that. Take it easy. Bye for now.